Nobody likes paying taxes, and Bitcoin savers could be leaving a lot of money on the table if they don't have a sound financial plan and tax strategy. Sound Advisory is a leading financial advisory firm with over $150 million of assets under advisement. They'll work with you to optimize and file your taxes with Bitcoin-friendly CPAs while also developing personalized financial strategies that align with your specific goals. Check out Sound Advisory at thesoundadvisory.com for more information. That's thesoundadvisory.com. Now back to the show.
There's no exception yet. Like, we're right on track now. And I've warned my followers, you don't want to be out of the market for a parabolic move. Since Bitwise has proof of reserves, this actually allows us to analyze, all their transactions. Around the third halving, we surpassed the point in Bitcoin where supply was most abundant. I have nothing against these models. Everyone can make their own model. Saylor also came out with a model actually at the Nashville conference, and he actually used this exponential model, but then where he uses like an exponential increase, then a correction, an exponential increase and a correction, which is kind of similar to a power law in a way.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey, everybody. Welcome back to the Bitcoin Frontier podcast. This week we have on Rational Root. Root, welcome.
Thank you so much for having me, Joe.
Yes, absolutely. Glad to have you. Let's dive right into the current state of Bitcoin. Maybe starting with the first chart that you have here. Where are we currently in the 4-year cycle?
Yeah, so we're still in the recovery phase, as I call it. If you look at the spiral chart, which, I think all of your viewers have seen, I suppose, so I'm not going to explain it, but if we look, we're right on track in the 4-year cycle. And now we had one... we had the all-time high before the halving, which was a bit of a first time. But in Bitcoin, there's many times that there's a first time for something. And actually, we had good reasons. It was because of the ETF approval. Now, for the last 6 months, we have been in a downtrend. So, you could wonder, are we still in a bull market? I still believe that the full-blown bull market hasn't started. We're still, to me, in the recovery phase. After making a cycle bottom, which you actually can see here in the chart, we have a 2-year period, and maybe I'll just go to the next chart to explain that better. So we have so the number 3 is like the recovery phase. It's like a 2-year period, and that is quite similar for each cycle. So we have a parabolic move in the first quadrant, then we have a year of a downtrend in the second quadrant, and then we have a 2-year recovery phase. And if you look at the chart, really we look more or less right on track. The only anomaly that we had was the all-time high before the halving, which obviously was due to hype around the ETFs. And so there's actually more reasons. We also had a bit of a muted top in 2021. And so it's more easy to make an all-time high as well because of that. And also due to inflation. It's another factor. We had, 40% increase in M2 money supply. And so also that had an effect. So I think it was more easy to reach this price level because of that. And so there's a couple of factors there for that all-time high. Because if you look at, for example, Bitcoin in terms of gold, we still haven't made an all-time high before the halving, and so it's because we measure in USD that we see this. Of course, with USD expanding so much, it's you get these distortions, right? Like so, you have to account for inflation, which is quite hard, But still, I think since everyone looks at in US dollars, we continue to use the US dollar rather than gold. It's just more easy to refer to the price.
Yeah, that makes a lot of sense.
This chart reminds me of something that I've seen somewhat recently where a lot of people talk about a majority of the time in Bitcoin, the price is just kind of like brutal. It's either in a drawdown or correcting kind of aggressively. And then like 20 or 25% of the time, it's just like melting faces and going parabolic. And this kind of highlights exactly, how that's happened in the past. Why do you think that happens? Like, why is it such a short period of time where the price of Bitcoin just corrects upwards in such an extreme way?
Yeah, it kind of builds up. So with the recovery phase, it's indeed a lot of sideways, boring price action where people kind of get bored and sometimes capitulate. Especially, we saw that recently. There was like max fear. Even though we're right on track if you measure from the bottom, which is a chart I'll go into soon. But yeah, it's all down. It all comes down to psychology. So there is suddenly greed starts to appear. There's this build-up of hype, and then we really get like a wave of hype coming into the market that causes exponential price increases, and exponential price increases are not sustainable, and therefore we have a bear market after, and it's a pretty severe one, like a 80% drop in general. And this has played out now 3 cycles in a row. And so there's no exception yet. Like, we're right on track now. And I've warned my followers, you don't want to be out of the market for a parabolic move. Now, there's always fears. Is a recession coming? We might go into that topic later as well. But, there's always fear in the market. There's always reasons to be out of the market. But, considering we're really approaching this parabolic move phase in the 4-year cycle, it's something that you don't want to miss, because those gains, if you count in Bitcoin terms, you probably will not get back to the same amount of Bitcoin if you miss out there. And so I think it's very dangerous to be out of the market. Now, there's always risk that the Bitcoin price will crash, and we don't know really how it will respond to a recession. There's always reasons, as I said. And so maybe, something special will play out during the recession. We cannot really predict the future. But I think if we look at the developments in Bitcoin, the adoption on the institutional front, even nation states, it looks very bullish. Also on the tech side, Bitcoin keeps developing. There's literally no reason why the Bitcoin price should not continue to go up, other than just fear because of certain events like a recession. So my advice is to be in the market. It's not financial advice. I cannot give out financial advice, so a disclaimer. But recovering from a parabolic phase is difficult.
Yeah, I tend to agree, and also not financial advice, obviously. Let's take a look at your next chart, the cycles from the bottom. I'm curious to see what that looks like now.
Yeah, so here I look at the cycle bottom. So again, I highlighted this recovery phase. So it's the exact same period, or more or less, because we measure from the bottom in the 4-year cycle. We look exactly at 4 years ago, but it's almost similar because the bottoms were so close to each other. This is almost the same view as the 4-year cycle. But looking at the bottom, if you start measuring from the bottom, the recovery phase, we see that we had some overextensions and underextended price action. For example, the orange line here, which is it's the 2021 market. That's actually 2019 there. And so we had an overextension because of Plus Token. Plus Token was a scam from China, and it actually accumulated like around 200,000 Bitcoin, which was quite a lot, And so it really made the Bitcoin price rally that was from the 3K bottom to 14K, and then it dropped again, obviously, because it was early on. It was a bit of a premature rally. And you could see also in that same orange line, we had the COVID crash, which made us go under the trend line. But then we recovered back to the trend line. And we have seen that with the 2017 market, which is the yellow line, that kind of follows continuously that same trend line. And now with the current cycle, which is the magenta color, we had an overextension due to the ETFs. And we can clearly see that here how we are now going back to the mean of the recovery growth. And so I think, after recovery phase comes this parabolic phase. Now, the parabolic phase is quite different for each cycle. We have seen diminishing returns historically. So, I'm not going to claim that we're going to make the same returns in the parabolic phase. Maybe we will see diminishing returns. Maybe we won't. But those 2 years are quite similar price action as we recover to the previous all-time high. And from there on, really, like, hype starts to take on, and we see like a parabolic price increase, which obviously is not sustainable. Now, the parabolic increase, the capital this time needs to come mainly from the institutional front, because each as the Bitcoin price increases, more and more capital is needed, and so that mainly is going to have to come from the institutional front and perhaps nation states. Although it's still slightly early, although there was news today about Bhutan also buying Bitcoin. So there is multiple countries that are like looking into this, and so that will come eventually as well. But we're still early there. Even with the institutional adoption, we're early. We had the previous cycle. We had a bit of a muted top, and actually, I think partly that was because also there was really no proper gateway for institutional players to come into the space, and so they just kind of ignored it, and so there was therefore we also had a bit of a muted top. But now that with ETFs that has been resolved, and so now the floodgates are open, if you will. Although I do think institution will move in more gradually, but it's yet to see if they're also going to be really susceptible to hype in the market. Perhaps they will. And if we think of the 4-year cycle, that should happen within the next year or so.
Yeah, that is a really good point. I feel like almost everyone understands or first begins to learn about Bitcoin because the number is going up. And now it's like people can really, or institutions and, corporations and governments can really allocate to Bitcoin in size with ETFs and other solutions as well. But on this chart that you're showing here, that dotted line of kind of where the parabolic phase might start and the recovery phase might end. Do you know when that is? Like, is that December? Is that January or roughly? Is that about right, I guess?
Yeah, that's the end of the year, more or less, because the bottom, but yeah, it's the end of the year. So if we look at this chart, so see the bottoms are all aligned here in the south of the chart, and then a 2-year period starts. So that's more or less the end of the year.
Awesome, cool. You also have the on-chain value chart. That'd be interesting to check out.
Yeah, so
I think it's the next one, maybe.
In addition to the chart here from where we compare cycles and where we just compare the cycles and look at the trend line based on the recovery of the previous cycles, we can also look at the on-chain value map, which is based on several on-chain indicators. We can get into some more detail if you want. But here as well, we see that we are currently around fair value, which we also were around the third halving and also around the second halving. And so, of course, we made an all-time high here right before the halving. And again, that was due to the reasons that I explained earlier. In the second halving, we also almost touched the overvalue line, which is the orange one, around the second halving. That wasn't an all-time high, obviously, because we had such a high peak in 2013. But to me, the current recovery looks very similar to the 2016 market, but it also the current downtrend is a bit more similar to the 2019 downtrend. So obviously, there we saw a bit more hype in the market, and so because hype is not sustainable, it basically causes an overextension due to sudden like exponential price increase, and then it's always like nearly always followed by a recovery or a consolidation period where we see this downtrend, and we can even see here like quite well the angle of the downtrend. So in 2019 we had a bit of a steeper downtrend, Now we have kind of like not such a severe angle of a downtrend. So it's moving a little slower. And to me, we're kind of in between the previous two cycles. So we're not as overextended as in 2019, but we're a bit more overextended in 2016. So also in terms of price action, I expect that the recovery could be a bit more severe than we saw around the second halving, but perhaps slightly less severe than we had around the third halving. Now, of course, the COVID crash next to the third halving, which took us all the way to the heavy undervalued level, that was a bit of a black swan event. So if you think that away, then we slightly reached that undervalued level for a bit. And I think that is still possible, although I doubt that we will get there for the reason that I just explained. I think we're kind of in between those cycles. And so we might see a less severe downtrend as we had around the third halving. Also because that 2019 market, due to Plus token, which accumulated like 200,000 coins, was actually quite similar in amount of coins if you think of the ETFs, which they have accumulated. But the ETFs are, of course, more sustainable. It's not such a scam as the Plus token. So when those Plus token coins like flood back into the market, it obviously a lot of supply was added to the market, and so we have a more severe downtrend. Now I think we have a bit more sustainable market. ETFs are accumulating again, but we will get into those flows in a bit.
Yeah, I definitely want to get into some of the ETF flows. What specific on-chain metrics are part of this value map, and how did you pick them, I guess?
Yeah, so I've been like the thing I do in general with the Bitcoin strategy platform is there's so many indicators out there, right? If you log into Glassnode or so, you just get confused by the amount of indicators that there are. So what I try to do is curate, like really see like which indicators work, which ones don't, which have really something fundamentally like that there is a real reason why there is logic behind this indicator or not. And so far, like also with making this value map, I kind of wanted to take like the best bottom indicator and the best top indicator, and then create like these levels in between. And so I ended up working with coin value days destroyed, which is a metric actually initially by Willy Woo. So I did a custom implementation of that metric for the bottom indicator. And it's based on coin days destroyed. So when a coin moves, it starts building up coin days. So when a coin doesn't move, I have to say, it starts to build up coin days. And as soon as it moves, it destroys those days that it has built up. And the coin value days is actually, it destroys the total value. So we look at the dollar value of the coins that are destroyed at that moment. And this allows us while actually we use a constant to create this bottom indicator, but it has been pretty reliable if we look at the whole history. And it actually starts moving up, and it never moves down, which is also kind of what I was searching for. There's other bottom indicators that I have, for example, a short-term holder floor, but that can actually move down. But in a way, you would ideally, if you want a bottom indicator, you want one that never, that you're sure that will never move below that. Or, you're never 100% sure. It's always an indicator, right? The idea is clear there. And so what I liked about this indicator is that it always gradually moves up, but during a phase of hype, it moves up steeper because, of course, a lot of more value gets destroyed as some of the long-term holders sell off some of their coins to new entrants. And that's the reason why that value starts moving up. Now, for the top indicator, we use a whole different approach. I think there's one other guy that also found this top indicator independently. He's a mathematician as well. He's very good with on-chain analysis as well. I've discussed this indicator as well with him. We both independently found this top indicator, and this is actually based on capital flow and based on available supply. So actually, we look at supply and demand, and it's actually when it has a very good fit for each stop, and it's quite a simple metric. It's quite beautiful, but it looks at demand saturation actually. So when we get a saturated available supply for trade, we get a saturation in demand, and therefore it marks the top fairly well. And so I think there's quite some logic behind these metrics, and I came up with this value map quite some time ago. I think even maybe as in 2021 or so, or 2020, I think even, and so it called the bottom perfectly as well, and I think what it shows now again around that fourth halving, very similar behaviors to previous cycles. So I think it's a very valuable indicator. Now it does not predict into the future, but I think that's even better actually. There's, as soon as you're going to start predicting future price action, it's always more difficult, and it's likely that you're more likely that you'll be wrong. So the cool thing with on-chain data is that it's very good at looking at what is going on today, and based on the data that we see, we can kind of decide: are we overvalued? Are we undervalued? And I think the value map is one of those charts that illustrates this very well.
Yeah, it's a great idea to use different metrics for trying to identify a current bottom or a current top. When you think about the Plus token Ponzi scheme that kind of made that big run up in 2019, and then also like the ETFs with a lot of coins flowing out of GBTC and into BlackRock, Fidelity, and all the other ones, does that, in your mind, significantly alter on-chain data and like potentially make the metrics less useful, or you have to just keep them in mind? How do you think about that? Like especially going forward now that the ETFs do hold hundreds of thousands of coins. I think they're closing in on 1 million coins total. How do you think about that?
Yeah, so everything comes down to fear and greed eventually, and it doesn't really matter which catalyst causes greed or fear. We just see over and over that at certain times there's greed in the market, at certain times there's fear in the market. And the cool thing about on-chain is it allows us to look at and predict kind of like if we get a max fear event, like for example COVID, what would be a bottom price, and so we kind of we look, since the human psychology is kind of through these metrics we can see this behavior, and we can actually also, for example, with short-term holder supply, I have some, in my opinion, very powerful metrics with short-term holder supply, where we can look at short-term holders which are more susceptible to price action, and we can actually see like when they're at a loss, like what is kind of like a max pain event for them psychologically, like how far can they handle loss. And you can see on average that is similar every time. And so basically we're just measuring different levels of fear and greed in the market, and like we look at the extensions, like what is the max fear that a market can have, and based on that we can decide where price goes. So I do think it is incorporated in the on-chain data, and it's not really a problem. I have to think, this meme comes to mind, where if you think of the Bitcoin adoption, that it's not a straight line, right? There's all kinds of hurdles on the way, and that plays all in on the psychology. And but that is perfectly captured by the on-chain data, and so we can actually take that into account.
Yeah, it's a really good point. I think your next chart is interesting. I think it's kind of that Wall Street psychology cheat sheet. What's going on here?
So here, what I tried to do was, since psychology is so important and we can see it so clearly in the data, I tried to map this, famous Wall Street cheat sheet into Bitcoin, and I think this mapping is quite beautifully done in terms that is quite accurate, at least today. Now, if we in the future would not continue in the 4-year cycle, obviously it will break. But so far we're beautifully following this same psychology, and we're in this calm phase currently, which also kind of fits and where everybody's kind of waiting for confirmation on the continuation of a bull market. And it could come as soon as tomorrow. Like if we get rate cuts, it could ignite, but maybe it is also another catalyst. But we're waiting for it's kind of build up. Everyone is waiting for confirmation, and that's the phase that we're currently in. So obviously we had some anomalies, like the all-time high before the halving, which here we can see that kind of fell in the doubt phase, but there was a lot of doubt around that halvings, and so we see a bit of a deviation, like for example in the 2017 market, that again, that plus token in 2019, I have to say, that plus token also we see a bit of green in the third quadrant there for the previous cycle, but followed by some red. That was a bit more early on than currently. Now we seem to follow a bit more in the 2016 cycle in terms of growth, except that we even made an all-time high now. But I do think what is illustrated very well by this chart is just the psychology of each phase, and I think it has been fairly accurate. Now, obviously, there's no guarantee into the future, but if history is any indicator, we should get to optimism soon.
Yeah, this is a very interesting chart to see. I want to dive into global liquidity. I think that's like your next two charts. What do you see there?
Yeah, so as I said, we're waiting for a catalyst. And so global liquidity is one of those. If we get a rate cut and the M2 money supply starts to increase, here I measure the M2 money supply globally. And so we're already again at an all-time high. But we had like a very long sideways period. And so still the Bitcoin price managed to do quite a lot in that during that phase. Obviously, again, ETFs had an influence there. But the M2 money supply, fiat currency increased on average 7% per year. And we see that, we're likely to move back to that. And so when rate cuts are coming, more liquidity will be available again, and move into riskier assets, including Bitcoin. And so it's quite likely. Now, obviously, the rate cuts are coming because of a recession. So this is a risk, like how will Bitcoin respond to this recessionary environment? Will it be seen as digital gold, or will it be seen as the risk asset? But still, I think with if they're really going to inject quite a lot of liquidity, I think the downside is limited because we're actually we had just a 2-year recovery phase, and so the downside we were barely at a new all-time high that we had, and so the downside, in my opinion, therefore also is less severe than a full-blown bull market downside. What I think is more likely, if liquidity starts coming in gradually, it depends a bit on how liquidity will move in. So if liquidity will move in gradually, I think also Bitcoin will move more gradually. If we get like a really sudden liquidity injection because something breaks in the system, we could have more of like a COVID type situation, although perhaps not as severe, because people have been kind of preparing themselves for a recession for over a year already. Not everyone, of course. It will still be a surprise to some, but it's not like a sudden black swan event as the COVID crash, for example.
Yeah, it does kind of seem like if we do have a recession, it's like the recession that everyone has been predicting.
Exactly. Yeah. So therefore, also I wonder, like, will it really come, or will we just kind of like, it might also just be a bit of a stagnation, and it might like hit certain industries more than others. And so it's yet to see, but at least global liquidity will be increasing, which generally is a positive for Bitcoin. And if we look at the rate of change, so the yearly rate of change, we can see really that during bull markets we had these high increases in global liquidity, which provide like more favorable conditions for the Bitcoin price.
Yeah, absolutely. Do you think the election will be a catalyst as well, or a potential catalyst?
Yeah, it could definitely be, depending on who wins, of course. if we have Trump as a winner, we will definitely have more favorable Bitcoin policy, and so that might make Bitcoin, it might be a catalyst for Bitcoin. But yeah, if the other party wins, maybe it's not such a. It might add to more continuation of sideways price action or downside, the downside trend that we're currently in.
Yeah, it's fair. I guess it could be some sort of inflection point, but time will tell. What about short-term holders? Let's look at that chart.
Yeah, some other metrics that I find useful is short-term holder supply. It's really a powerful metric. I think people underestimate this metric in a way. So this really is a proxy for hype in the market, and so we can see these steep increases in short-term holder supply, and they kind of resemble like this wave of hype that comes into the market, and so we can also see that we're in this steep downtrend now. So basically, the hype is gone. And hype doesn't easily come back. It needs like this build up. But we can also see in 2019 that we had like this like a fair increase in that short-term holder supply, and then we had a downtrend for some time. We went sideways, and then it started moving back up. So I think considering the 4-year cycle that we still have over a year to go, there's quite a reasonable chance that we will see a continuation of hype coming back into the market. There's still time is on our side. And but I do think this is a powerful metric to look at. Now the thing is, and actually, this was a question from some of my followers. They ask like, are ETFs reflected in this data? And I can tell that in the peak that we're currently looking at, around the fourth halving, those ETFs were included in that increase in short-term holder supply. Many ETFs started accumulating from that point on. Now, there are some differences with ETFs because most of the ETFs actually they use Coinbase as their custody solution, and Coinbase unfortunately still uses some of these legacy addresses where they kind of just accumulate Bitcoin to the same address, which is they don't use new addresses for each transaction as much, and it depends a bit. I mean, I don't know. We don't know really exactly how they do it, but we have seen with some insights from Bitwise, for example, that they accumulate Bitcoin this way, and so if they do accumulate Bitcoin that way for these ETFs, then some of that supply might be marked as long-term holder supply because we look at the first date when an address starts accumulating, and so the 5-month period now has passed, and so some of that supply is now classified as long-term holder, and so if they continue to add to those addresses, then they will only show up as long-term holder supply instead of even though they're like new entrants coming in. So there's a bit of worry in that sense that the short-term holder supply, will we get a severe peak again because of if the main if new entrants are mainly going to come from the ETF cohort. I still think for several, and we'll get into some more data in a bit, but there's definitely several ETFs that are still going to be visible in this short-term holder metric. And if we think of the last peak, actually only around a third or maybe a half of that peak was due to ETFs. The other half was due to hype around the ETFs, because the increase there was around 1 million coins. But the ETFs only accumulated, we started at 600. There was only 300,000 coins or so, but also Grayscale sold off 200,000 coins. So let's say that half of that peak more or less was due to the ETFs, and so the other half was still due to hype in the market. And so we'll definitely see a new hype wave coming in when it happens. But indeed, some of that supply might be marked as long-term holder. But we'll still get into that with another chart. So maybe we can look into some of the ETF flows, because we basically had two weeks of outflows which caused like max fear. Again, we're in this downtrend, and people kind of lose patience when we're in such a long downtrend, and therefore also they're looking for scapegoats, right? They were saying like, oh, maybe paper Bitcoin is appearing with Coinbase, and that is the reason. Justin Sun was accusing Coinbase, that they don't have this proof of reserves, which I mean, I would also wish that they would do proof of reserves, but yeah, they don't. So, but I also don't think there's much paper Bitcoin. I think it's more because people are impatient because of the downtrend, and so they're looking for reasons as to why Bitcoin is not doing much. But I think Bitcoin is doing very well. If we look at the last 2 years, Bitcoin has increased significantly, and we're right around fair value where it should be. And so it's just because we had a bit of hype, and people wish that hype would continue, which is kind of unrealistic. So I don't think there's much paper Bitcoin currently with these ETFs. Potentially there could be paper Bitcoin. Indeed, that's a risk. I wish they would do proof of reserves, and I wish even the ETFs would do more proper self custody as well. But yeah, it is what it is. Institutions take usually the easiest route and make like these decisions because they don't want to have all these responsibilities either. Even Michael Saylor is using Coinbase custody and Fidelity, so he's splitting some of the risk between those two. Fidelity does self custody, so I do think also, for example, supply from Fidelity will show up in that short-term holder metric as they will probably use SegWit addresses rather than legacy addresses. But it's good to see new inflows into Bitcoin, and even BlackRock. Again, we were seeing inflows. We had 2 weeks of outflows, and BlackRock had like zero flows for some time, which is normal. But now we're seeing inflows again, which is a positive.
Yeah, this is very interesting. Let's definitely keep going through some of these ETF charts.
Yeah, so this is just the entire holdings of the ETFs. So around, or this is the US ETFs, I should say. So it's 900,000 Bitcoin that they have accumulated. Obviously, we started at 600,000 at the ETF approval due to Grayscale, which was coming from the Grayscale Trust, and so we saw a lot of outflows there. You can see that now they're stacked on top of each other by size. So BlackRock is currently the biggest holder, and so mainly all of them except Fidelity here does not use Coinbase. So it is a bit of a risk that all these ETFs are using Coinbase as a custody solution because Coinbase has this honeypot of Bitcoin. But I understand that the ETFs don't want to have this responsibility, right? And so it's I hope people can follow Bitwise footsteps to have proof of reserves, and even I would hope Michael Saylor would, for example, do proof of reserves since he's using Coinbase custody as well. He could set an example as well by sharing the addresses. Now there is some risk maybe to it, like maybe that's the reason why they don't do it. Now the cool thing about Bitcoin is that we can do instant verification, right? So I do think Coinbase Prime, which they use as the solution, does share their addresses with BlackRock and Grayscale and ARK Invest. It's not public information, but I'm sure they do share it. I'm sure BlackRock is interested to see if they actually have the reserves. So the cool thing about Bitcoin is that is possible. To do it publicly is really cool. But yeah, we're just not there yet for all ETFs. But it is something that ETFs can use, to compete. So Bitwise clearly does a good job in that, and they're doing very well.
Yeah, I just had a thought that came to mind regarding this ETF chart. You know how in the past people have shown exchange balances, and everyone kind of gets excited when they see exchange balances going down, and then now it's like everyone's getting excited because they're seeing ETF balances going up, and it's like you could almost go back and make the argument for exchange balances going up and be like, well, if exchange balances are going up, that means everyone's logging into Coinbase and clicking buy Bitcoin, which could actually be a good thing. But then we cheer for, or people say like, oh, it's good that the exchange balances are going down. You think we'll ever get to a period where like oh, the ETF balances are going down, that means there's less coins available, which could be good.
Yeah, it's a good analogy. But the difference with the exchange balances, of course, if exchange balances go up, it usually meant that long-term holders like hodlers were sending coins to the exchanges to sell, because they self-custody their Bitcoin, which, many people did, but of course, with now the ETFs, they don't. And so actually, when these balances increase, it actually means that people are purchasing, but just keeping, the ETFs as the custody solution. Now, of course, some new entrants left their Bitcoin on exchanges. If we think of new hype, a new hype wave that causes like these bull markets, of course, new people that come in the space, they often also left Bitcoin on the exchanges. We saw that with FTX, for example. Indeed, there might be a change at some point. But a cool thing would be if we would have proof of reserves so that we can track these things more individually and see what's going on.
Yeah, it's almost like over time, there's just through the waves of adoption, there's been different cohorts buying from each other. And it's like when you first started Bitcoin, like everyone self-custody because that was the only way to do it. And then if exchange balances were going up, that's like everyone was buying Bitcoin from the people that self-custodied. And now it's like everyone today, or what's bullish today, is the ETFs are buying it because that's kind of like the new way, quote unquote, to buy Bitcoin. It's kind of interesting.
Yeah, it's definitely an interesting dynamic. Like the way I see it is, of course, these ETF buyers many of them are new entrants. And so in a way, they're just allocating to Bitcoin, which is a positive. They don't have the ideal custody solution, but they probably also don't know even that much about Bitcoin. So I hope while they're investing, also all these institutions, that they continue to learn. And they will be incentivized to do so. I mean, if you have a 1% portfolio allocation as an institution to Bitcoin, and at the end of the year you're going to look at the gains, you're going to be incentivized to learn more about it and to allocate more, at least over the coming years. And so I think there's a learning curve there as well. What I do think is that in general, these ETF products are possibly a safer product than just a random Bitcoin exchange that is unregulated. In a way, there's something to say that, there were many scammy exchanges before, which were even worse, than Coinbase Prime, which they use now. Not that I'm a fan of Coinbase at all, but I do, it's a U.S. company as well, and so it's probably it has audits, and I'm sure BlackRock, it needs to work with BlackRock and Fidelity. So there could be paper Bitcoin, but at this point, for sure, it's still unlikely. I'm not saying it will never happen, but I think being so early into it, I don't think they're already making up Bitcoin.
Yeah, it's a really good point. It's basically like the ETFs and the exchanges are like top of funnel for Bitcoin, and then eventually people learn that, hey, there might actually be a better way to securely hold this for a very long time. Let's look at the Bitwise chart. I'm curious to see this, or whatever you have next.
Still before we get to that one, there's I also made a chart around to check the cost basis of the ETFs. So I have the average cost basis. We're currently back above again, and we have the individual cost basis for each ETF. And so the outflows that we actually saw the past 2 weeks were mainly from Fidelity, ARK, and Bitwise. And we kind of also retested those levels, and now we're back above again, even above the BlackRock. BlackRock actually hardly saw any outflows, but now we're again above that cost basis. Now, of course, this is still little data. We're only 9 months into the ETFs approval, so this needs to build up over time. But I do think that's valuable information to look at the average purchase price of these ETFs, as it's the same concept as the short-term holder cost basis for the entire Bitcoin transactions.
Yeah, it's pretty fascinating. I don't know if you've seen this or if you have an opinion, but I've seen on BlackRock ETFs, their outflow data for their Bitcoin ETF, there's been like a number of days where it's not negative, but it's like 0 on the dot. Any insight as to like why that's been happening? Like obviously Fidelity, like you mentioned, or other ones actually do have outflow days, but BlackRock seems to have like an abnormal number of 0 days.
No, it's not abnormal. It's actually very normal to have these 0 days. So ETFs, they actually create, they have like a Bitcoin creation order, as you will, like which is a certain amount of Bitcoin that they'll add. And so if they're below that amount, then they're just kind of settle themselves. So 0 days are very common. I think, even for some ETFs, the majority of days are just 0. So even if there's like a small amount of there can be actually a high amount of volume, but if there's like eventually the net flow is like relatively low, then they'll just have a 0 day, so that's the APs actually settle that.
Gotcha, that makes sense. Interesting. Yeah, let's dive into the next chart.
Yeah, so since Bitwise has proof of reserves, this actually allows us to analyze all their transactions. And so here what I did is divide the Bitwise holdings by short-term holder and long-term holder supply. So we can look at that, and which is interesting again with regards to this short-term holder metric that we showed before. The peak that we have here. Are the ETFs included? And I said for this first peak, because it was the ETF approval, for sure all ETFs were included in this peak of short-term holder supply. And we can actually see that here for Bitwise. So all of their supply was short-term holder for quite some time. And even because they first accumulated Bitcoin with Coinbase as the custody solution, they used like a legacy address in the beginning, but then they started doing proof of reserves, and now they're actually batching their Bitcoin for 1,000 Bitcoin for each address. So they're dividing their Bitcoin per 1,000 Bitcoin for each address. And so when they announced that they were doing the proof of reserves, they obviously moved their Bitcoin into these new addresses. And so the long-term holder supply, because actually there's a delay, the difference between long and short-term holder supply is basically on an entity basis in general. We look at this 5-month period. So of course, this 5-month period has passed, and even why does it increase here quite steeply? That is because they still moved some of that Bitcoin in the early days due to this proof of reserve. So it remained classified as short-term holder, even though perhaps you could already say that it was a long-term holder supply. But yeah, now at this point, we see that the majority is classified as long-term holder supply. But still, the new supply that is coming in, although we have a bit in a downtrend here a little bit. So obviously, there's not a lot of new supply coming in, but still some of that supply here before is aging into that long-term holder cohort. And so it is positive to see this aging as long-term holder, which is it's more likely that it won't be spent. But for Bitwise, we can definitely tell that new supply coming in will be classified as short-term holder. So that will also show up in the short-term holder metric. And I do think for Fidelity as well, for the other Coinbase users, I'm not sure yet. Maybe some will, maybe some don't. I don't know exactly. It would, because we don't have insights into those addresses, I don't really know how they will be classified. But for sure, we will see an increase in that short-term holder supply metric if we get new hype in the market, also from the ETFs. But perhaps some of it will not show up, considering some of those addresses might be classified as long-term holder.
And just to recap, the reason I guess some of those addresses are classified as long-term holders is because they're sending to an address that they've never spent from already. Is that right?
Exactly. So they spend to a new address, and basically from that date on, you start counting. And if nothing gets spent from that address for a 5-month period, you can classify it as long-term holder. There's this, at least statistically, when addresses hold coins for over 5 months, they are way more or less likely to be spent. and so this is it's a very powerful metric.
Makes sense. Yeah, let's dive into an update on the HODL model. I'm excited to see what this looks like now.
Those were some questions in your comments. At least people wanted an update on the HODL model. I don't know if I should explain the HODL model in general. I don't know. I suppose maybe some of your listeners are not really.
Yeah.
Sorry?
Yeah, I think there's always new people. Might as well.
Yeah. So the concept of the HODL model, it's actually a hypothesis, but we can kind of see it in the data, is that around the third halving, we surpassed the point in Bitcoin where supply was most abundant. Because in the early days of Bitcoin, and I like to call the first three halvings of Bitcoin, the initialization phase, where the price was obviously very low, so little amounts of capital needed to flow in. With Bitcoin prices at a cent or so, like not much capital needs to flow in to move the market. But we had a very high inflation rate. Actually, in the first halving, 50% of the supply was mined, and in the second halving, an additional 25% of the supply was mined. So basically after two halvings, already 75% of the total Bitcoin supply was mined, and so there was a very high inflation rate. And so instead of because we often think of Bitcoin as digital scarcity, there's only 21 million coins. But in the beginning, this was not true. Now we're obviously getting, we were approaching that 21 million already more closely. But in the early days, Bitcoin was actually, because of that high inflation rate, becoming more abundant. So there were, now there was little capital that was needed to move the market. So the Bitcoin price was very volatile. But actually, at the start of Bitcoin, it was still scarce. But then, with this high inflation rate, we got to a point where Bitcoin is obviously becoming more abundant instead of less scarce. Now, around the third halving, at least from the data, I would argue that we passed an inflection point where the supply again is becoming more scarce. Now, why is this? This is because supply, always goes into the hands of strongholders over time. Also some of the supply is lost, obviously. So if we look at a liquid supply, so supply that hardly moves ever, the rate at which a liquid supply increases is faster than the new supply issuance. And so this actually causes that the available supply for trade is shrinking. Now, is this useful to know? I think it's definitely a useful insight, because basically from the third halving, we can argue that Bitcoin is actually only since the third halving, digital scarcity is materializing. That's how I would like to see it. And so this also puts an upward pressure on price. Now, supply shock metrics have been quite inaccurate, and also supply shock models have been very inaccurate over the years. And so, it's the question like, okay, can we really do something valuable with this information to predict price behavior? I'm not sure. I mean, people have modeled the Bitcoin price with all kinds of different models. We have seen, I think one of the first models was Trololo, actually. It's a model that stems from 2013, which was, I think, a precursor to the rainbow chart, which is a log growth curve. So basically, I mean, Bitcoin adoption is happening. And if you're going to model this, there's different ways how we can model the Bitcoin price. We can either use a log growth curve, which has a decreasing rate over time. And so that is actually very conservative. Another way to model Bitcoin is using the power law, which actually uses a constant for the increase. And the most bullish models are exponential models, where we will see price really go up fast. Now, I've been thinking about these things for a long time, and I've been, before I also considered the exponential models to be maybe even valuable. But I'm starting to lean towards that, exponential models are not what is happening. And we can actually see that because in Bitcoin price action, as soon as we get like an exponential price increase, Bitcoin is unsustainable. We get like a severe correction afterwards. And so that actually shows that that exponential price increase is not sustainable, and therefore also an exponential model is unlikely. I mean, we can have exponential price action for a short amount of time when we have one of those hype waves coming in, but only for so long, and then we get a correction to return to the mean. So there is these different forces at play. On the one hand, we have seen in Bitcoin's history diminishing returns, and I can quite confidently say that due to the increase in capital that is needed to push the Bitcoin price up even further, it's natural that we see these diminishing returns. On the other hand, now this data shows is that we actually get a more scarce supply over time, which is an upward pressure on price. So if I think of these models, I'm actually starting to lean towards the power law model as a valid option because a lock growth curve basically means that the rate of increase is going down over time, and considering that we have an upward pressure because of this limiting supply, I find that hard to believe, that is the case. And we can actually also see that some of those lock growth curve models over time didn't hold up as well. Whereas with the power law model, we actually have seen a pretty good fit, and even with early data, we can make a pretty good fit until today. And so it's quite reasonable to believe that even though we get these exponential price increases and then a correction, but also because we have this upward pressure because of available supply, I think that a power law could be a useful way to look at things. And actually, what I find a useful analogy to think of these things, if you think of a new city, of growth of a new city, there's only so much available land, and so in a way that land gets saturated, and often that also happens with power laws, and so that's quite similar to this fixed supply of Bitcoin. Whereas if you could have like an ever increasing land, of course it could never reach those values. And so in a conservative model, I think in this HODL model, I think it's reasonable to assume that it could continue with a power law fit. Although, my objection to any model in general is, again, like where I show here this inflection point around the third halving. Bitcoin's history so far has followed this power law, and to be honest, it also has good fits with the lock growth curve. But around that third halving, that inflection point, we actually have a change in the dynamics where we're moving to a more scarce Bitcoin, and so maybe that is a reason why it wouldn't hold up. And so I have nothing against these models. Everyone can make their own model. Saylor also came out with a model actually at the Nashville conference, and he actually used this exponential model, but then where he uses like an exponential increase, then a correction, an exponential increase and a correction, which is kind of similar to a power law in a way. And so all this to say is that I'm not against any of these models, and everyone should use them as they see fit. But for me personally, I find it interesting to look at these dynamics, but I don't know if we can really use them to determine price action, because there is a possibility it won't hold, and there's also not really any new information that I can extract from those models that I cannot do with other on-chain metrics. For example, looking at overvalued or undervalued level based on the power law. I also have a value map which shows that, perhaps even more accurately. And so So there's no really new information that I find valuable from these models. Now, I also had a HODL Model S, and I'm really going a bit on a rant here, but I might as well finish. So the HODL Model S is basically a more optimistic variant of the HODL model, where you can see that the supply really starts, the available supply for trades really starts shrinking towards that 2030 or so. So this would, in my opinion, imply more that we really would like start seeing substantial price increases over those two halvings. Now, currently, we're still on track of that in that dynamic, but so it depends a bit. Like, for example, if this dynamic would hold up, then I might also be a bit more skeptical on the power law. Then maybe we might start seeing more exponential increases, and maybe this inflection point of the third halving will cause the power law to break to the upside. So in a way, that's an interesting view on it. Now, for now, I think still the power law is a very good model in general, probably one of the better ones out there to look at. Future predictions of how fast price could go. But I prefer to take it more on a day-to-day level. And like I also think on-chain is more valuable in that sense, that we look on a day-to-day basis, like, okay, are we overvalued today, or like how much? What is going on currently on-chain, and decide like, okay, are we in a phase of hype currently? Should I maybe take some profit here? Or should I still hold for longer? I think all these dynamics, by using cycle analysis, on-chain analysis, is much more telling than a model that predicts far into the future.
Yeah, I think that was a great recap of the HODL model, power law model, and all the other models that have been out there. And I tend to agree that makes a lot of sense. Like, none of these models are perfect, but they can be useful to help people visualize like what might happen in the future. Even though obviously no model is going to be perfect whatsoever. But Ruud, this has been awesome. I could ask you questions and listen to you run through charts forever. But we do have to stop at some point. Where can the audience go learn more about these charts that you're showing and the work that you're doing?
Yeah, so all charts are available at the bitcoinstrategyplatform.com. The name is in the charts, where I tried to create a platform, like a curated platform with like the most useful metric, and from as well on-chain as cycle analysis, but also some macroeconomic data, global liquidity. All these charts are live, available for paid subscribers. Obviously, as a free subscriber, you can also sign up to the newsletters that I share, and I share a lot of these charts as well in my newsletters. I think the free subscribers are happy with the content I put out, and maybe I put even out too much for free as well sometimes. But yeah, so feel free to sign up if you want me to continue doing all these analysis.
Yeah, I'm a subscriber, and you put out great work, so thank you. Any final closing thoughts that you want the audience to walk away from?
Oh, well, I think we covered quite a lot already. Maybe I went quite fast over some of these dynamics for some. But the good thing with these videos is that you can rewatch certain parts. And no, I'm optimistic about Bitcoin. I think there are very positive signs. Now, obviously, the macro outlook is not as great, but we all know what Bitcoin is here for. So yeah, long term, there's a lot to gain from Bitcoin, and yeah, so I look forward to all that has to come.
Awesome. Me as well. Well, thank you, Ruud. Really enjoyed this one.